So last week on the Wall Street was very bad, and with the beginning of this week, I have said specifically in my previous video that things are not at all looking good. We have seen Dow Jones is trying to hold on to its support. Nasdaq looks weak, and there is a downside in the SPX as well. So we have seen how things have played out in the last trading session, where Dow Jones closed down by 160 point, S&P 500 34, and nearly 160 point downfall, or 1.5% down move in Nasdaq as well. And if you are indeed looking at the pre-market, it is not at all indicating any good thing. Okay, so things are looking quite bad. And see, when there is a fear of recession crops up, and there is a reason behind that. What we are looking from the global central bank is very hawkish stance, and it is not only the US Fed but also the European ECB, where they are simply focusing on inflation and trying to increase the interest rate as far as possible to curb down the inflation. So if this is the case, what we're gonna see going forward here is a downfall in each and everything. It's not only, sometimes this is one of those times where we cannot uh, correlate the currency with the stock market, because in normal situation currency falls down, the value of currency falls down, and you will see that stock market will go higher. But in this case everything will fall down until and unless things normalizes, or market will factor in the current situation or the uncertainties. So with the backdrop of this, let us analyze today's move and what will probably happen as far as today's US market is concerned. So right now this is the overall range for Dow Jones, and you can see on the upside we have 34,640 and 34,380, and on the downside we have 32,327 and we have 32,100. So this is the overall range, and right now one more point will add up, which is 33,315 320. Now it is very important, I would rather say it is mandatory for Dow Jones to sustain above 33,315 and 33,416, above which you can see an upside move. Because even if Dow Jones started moving higher from the current position, it will face resistance in between 33,315 and 33,416. And at the same time we have the similar sort of stop loss on the downside or support level at 32,327 and 32,104 or 32,100, below which you can see further downside going forward. So this is something which we need to look at. So still in the range, but looks very negative if you are looking at the P-market for 20th of December. And as far as Nasdaq is concerned, Nasdaq is just holding on to its support with a very little margin. You can see Nasdaq has already hit 10,547, very near to 10,547, actually closed at 10,546. And the last hope for Nasdaq here is your next support, which is specifically at 10,100. If Nasdaq falls below 10,100, let me show you. Okay, you will get an idea about the things which is about to happen if Nasdaq falls below 10,100. So below 10,100, if you are looking at the moving averages, I'm talking about the monthly chart. So you have 8,400, which is your 100-day moving average, and you have your 200-day moving average, which is as 5,500. So it is I would say nonsense to think about 200-day moving average right now, because even if you are bearish, you cannot be an pessimist for an eternity, because this is not going to happen like this. So right now 200-day moving average is out of from the picture, and what we are specifically looking at below 10,100 is your 100-day moving average. So what will probably happen is either the price will consolidate further, or the moving average will start moving up. So either will price will fall, or beg your pardon, price will fall, or moving average will go up. So right now the certainty is below 10,000. We have downside open up for 8,400. So things are looking very bad, and the only or the simple reason is because we have inflation. The IT spends are going to curb down, and this is a psychological fear that's been ruling the IT and technology stocks across the globe. Now as always saying, and I will say the same thing again, that the balance picture, if you want to look at the balance picture, always refer S&P 500, and you can clearly see the trend. Okay, you can clearly see the trend or the range, and for Nasdaq or for Dow Jones you will see support this and that. But if I may look at the zone, or if I may look at the swing as far as S&P 500 is concerned, you can clearly see how things are moving. So on the upside we have our resistance of 4,000, and the way things looks alike, so the way things looks alike, here we are. So the way things looks like, what do we have here? So here we are on the downside. Here you can see we have a big downside, and it will be in between 2,900 and 3,000. That is clearly visible in front of you, and it is not for the daily trading session, but as far as the big range is concerned, this is what we can think as of now. So 20-30% of downside is still left. So things are not at all looking good, and it simply indicates that the first half of calendar year 2023 is going to be on the downside, and hopefully we will see recovery in the second half of CY 2023. So this is the end of the video. Thanks for watching.